Okay, welcome back to another midday broadcast here at the Forecast Edge. We got a couple things to go over for our Edge alerts, and we also have a brand new Edge alert to address that went off no more than 25 minutes ago, in less than a half hour. So this one's brand new, State of the Union play. Real quick, we're going to go over our GDP hot print due to the fact that we have new data that was released and it's following our rules of engagement here, okay? So on our link, we got it at 3% here, okay? This is going to be the number that's coming out, updated today, all right? Again, the news comes out yesterday, but the disciplined trade is right here. If it's lower than 3.1%, we skip and cut the risk. We are exiting these positions. Again, if you go here to the forecast edge on the trade that we provided, this is again going to be the yes at over 3.0%. This is the highest conviction tactical play to capture the model consensus gap. Again, this is the actual play that we got into. We told the individuals, again, we were watching this. It says do not hold blindly to expiry. Use the Wednesday, February 18th final GPD now update yesterday, right? Which we saw was at the 3.6 and we were in the clear. Today we are re-engaging and we see that it is at 3.0%, which is putting us here. And this is the convergence momentum. It's too bearish. We're selling before tomorrow's release. That is step one of today's rules of engagement and practices here at the Forecast Edge. We are covering these positions, okay? Again, this is going to be on our play, the GDP hot print. We went over the data. We've been managing this position. As we said, we will manage all of these positions with you, win or lose. And today we are going to take a little bit of a loss on the GDP play, but we have exciting news because while we put this trade is in the past, we're going to close the position due to the data backing our thought process and our analysis on this play. So since this is going to be under that 3%, skip and cut risk. Exit the position. The convergence momentum is too bearish. Sell before tomorrow's release, which will be Friday's release. Again, we are out of this position, which is going to be the buying yes of 3% on the what's it called? Quarter 4 GDP for 2025 right here, okay? Again, we are getting out of these positions, covered this position at the um market price and or how you can get out. Now let's move on to our play that is just released, has just been released, the edge alert that just went off today right here, okay? State of the Union edge alert. Here we go. Thesis is the speech writing corridor. We are exploiting a fundamental mispricing on Kalshi ahead of the State of the Union address on February 24th at 9 p.m. Eastern Standard Time. Okay? The retail public is trading a personality thesis, betting on the president's unscripted rally habits and personal obsessions like his White House ballroom renovations, this, that, and whatnot. We are trading the speech writing thesis, leveraging the strict discipline, teleprompter adherence, and historically templates of a formal joint session address. Okay? Why we buy the portfolio. Here we go. By waiting for specific contracts, you create a risk condor, a risk adjusted corridor, excuse me. You aren't just betting on a single word, you are betting on the structural predictability of conversative um, speech writing. Conservative speech writing, excuse me. Lower risk, right? It says you limit your downside by anchoring the portfolio in the near certain policy mandates in historical SOTU precedents, right? Now, the higher ROI, you mathematically blend high probability structure anchors with high EV expected value variance plays to maximize your total profit yield. Now, here is our calculator. Um, per 100 units. Total risk, 100 units. Anchor legs, 55 units for the ICE plus trillion, and we're going to do alpha legs is going to be the 45 units of fraud in nuclear. Okay, the expiration is going to be the 28th, 2026. The development matrix right here is the trade, right? So here we go. Buy leg one, the anchor. We're buying yes for ICE slash National Guard at an entry price of 85 cents. Okay. And this is going to be the allocation of 35%. The logic is the border mandate, and the catalyst is border enforcement, is the central non negotiable policy theme of the administration, right? Now, here we go. Buy leg two, the EV engine. We're positioned. We're buying yes to fraud. Entry price is 80 cents on this one. Okay. Allocation is 30%. The conservative boilerplate. The catalyst is at a 25% ROI. This is the highest structural expected value position. Wasted, fraud, and abuse is a standard required speech writing phrase for discussing government spending and inflation. Even if the speech shifts into a grievance regarding the deep state or elections, this word acts as a rhetorical bridge protecting the position. Okay. Here's leg three, the dampener. We're buying yes for trillion at 94 cents. It's 20% allocation. The logic is the stabilization yield. The catalyst is it is nearly impossible to give a high in anticipated speech of U.S. Inflation and government spending without using trillions in the scale number, right? This is a low yield saving account used strictly to dampen portfolio variance and pay trading fees. Okay. Now, the last leg of our trade here is the variance. Yes on nuclear, which is going to be an entry price of 77 cents. The allocation, 15%. The logic, geopolitical surprise. The catalyst is we are capitalizing on two separate macro events. The ongoing high stakes talks regarding nuclear enrichment paired with his push for domestic energy dominance. This is the most disposable word in the portfolio. So we keep this strictly at 15% to limit exposures while capturing upside potentials. Okay. Here's our money management. Trading live world markets during a broadcast is a trap for retail investors. The order books become illiquid. Okay. The bid and ask spread widens massively, and the Kalshi API is faster than your television feed. Okay. Now, our golden rule, our number one rule for the event is your positioning, sizing is your stop loss. Do not attempt to day trade the speech once he starts talking. You set the portfolio and you let the math work. Remember, don't just predict profit. And again, it's not financial advice. Prediction markets involve risk. Of course, all trading involves risk, and only trade with capital that you can afford to lose. Now, going back up, how we're going to go and execute these positions real quick. First one, and mind you, the best part is another one of our things here at the Forecast Edge is that if you can click it, you can trade it. And what I mean by that is right here, Kalshi Trade Link. What will Trump say during the union? Remember, we have ICE. We're doing yes for ICE and National Guard. Okay? That is a yes for ICE and National Guard. We are doing yes to fraud. Okay? We are doing yes to trillion. And we are doing yes to nuclear. Okay? Now, with that being said, what we're going to do now is go into here. Our trade link takes us to the exact contract we want to be involved in and the trade that we're going to be taking. Okay? Now, here was this. Let's see. All right here. Ready? Yes to fraud. Okay? And again, this was going to be yes to ICE and National Guard, yes to nuclear, and yes to trillion. This is a four-legged trade and position here, and all the numbers are working with each other to build a stability and protection net for this trade. And if things all work out well, then we capitalize on the potential profits to the high side. Okay. Now let's go and see what we can do on something of this nature. Real quick, as always, I like to give our company a little bit of its time in the light, and this is the Forecast Edge. Again, my father, Dan, our partners, Vince and Thomas, and myself have put together something truly spectacular, and we highly recommend that you guys try to check out what we got going on. Go to our website, theforecastedge.com. You're going to join the war room. You'll select which plan's right for you, and then you'll be granted access to our edge alerts, which are through our Substack here. As you can see, this is exactly the play. This one is less than a half hour old. We're hitting the lives here right now on YouTube Live, on our YouTube channel, The Forecast Edge. We are live covering a position that we just posted for you guys in less than an hour ago. Okay, so this is right off the press. We have our position on here. Again, if you want, I'm going to leave this on the screen for you guys to see, just so if you haven't already, again, that is going to be yes at fraud. For these are the words. What will Trump say? The contract. What will Trump say during the State of the Union, right? We go back to our portfolio, and it's right here, okay? Yes to fraud, and that was our fill price at 81 cents. Then we did yes to National Guard, and that was going to be again at 86 cents. Yes to nuclear at 78 cents, and this is again the variant. This one was going to be the one that's variant, and then yes to trillion. All of these contracts are on right now, the four-legged play, and even this play is working out splendidly for us. The gas prices in the US this month, we already are seeing this trade hasn't been on for more than, let's see, this trade here, we called it the gas money trade. This is 4 days old, this trade here, okay? And we are seeing returns of 23% on our positions. Again, when this went off, these are we do these weekly. These are our edge alerts, and how you access them is through our Substack. And how you are granted access to our Substack is by going to theforecastedge.com. Joining our war room, selecting which plan's right for you, and therefore you will have access to these plays right here. Here's another great position that we got cooking up right now. The energy spike play, okay? We are in on these contracts here, XLE, June 18th, $50 calls, okay? And these are trading today at a price of $6.45. So overall, we are doing we're up 120 or $1.20 on the options price there. Okay. And look at the spread on this. 45 cents from the bid to offer, or well, if you would, the bid and ask. So the bid is at $6.45, and the ask is at $6.90. We have another, and it's only been open for 10 days. We have another potential chance here of capturing an additional 45 cents on our option price there. Okay. Now, here is here's oil today, which we love watching oil. Oil has been doing its thing. And again, what our belief is on this last trade is that we are going to be or that oil is the last hard asset to leave the launch pad. And what we're getting at when we say leave the launch pad is we're saying that oil, like gold, silver, uranium, and plenty of the other commodities, hard assets, have been ripping. For example, right now, as of February 19th, 26, gold is trading at $5,000. Okay, it's above $5,000, and even silver. Let's see what silver is trading as. Silver futures contracts here. We got silver trading at $77. How about that, ladies and gentlemen, friends and members of the Forecast Edge trading community? I mean, it's telling you $77 for silver right now is incredible. Okay, that's what the futures contracts trading. But even for our crude oil, $66.51 with all these Iranian headlines and the Venezuelan headlines too. Is like all this. Look at this. This week of chop for oil was incredible. We watched oil go from just about Let's see. We watched oil. Let me get to this for you. I mean, we were trading oil yesterday, 61. We're up practically 2 trading sessions ago. We've jumped $5 in the value of oil. Okay? Now up another 2%. Yesterday was up 4%, right? So we're on Kalshi now again. So real quick, what I'm going to show you guys is how to execute a position using Kalshi, okay? And the first step is that you have to access the Kalshi trading platform, which can be done in one of 2 ways. It can either be done on their website, kalshi.com, or using the mobile app, the Kalshi mobile app. I, again, am here to help you guys execute these positions. If you are having troubles and you are members of the Forecast Edge, please direct message me and I will help you take care and become comfortable executing trades on these predictive markets. Okay. So for today, we will go into crypto and we'll see right here. This is crypto at 3 p.m. Eastern Standard Time. Okay. And this is saying that let's see these markets 67,000 or above. Let's see what the best odds are. We might take this one right here. We'll say above 67,250 at 32 cents. Okay. We got $7.50. So we'll start with a $5 um trade. And the $5 trade is for $4.70. As you can see now, we are in 14 contracts of yes at an average price of 32 cents. Okay. Now we bought it here in dollar amounts, but when you are filled on these positions, then you're going to click from buy to sell. And as you can see, I'm selling in contracts and I have 14 contracts of yes at an average price of 32 cents. Okay. So what I will do is as this trade's progressing, I am going to make sure that this is I'm getting out of a majority of my positions. So at least 8 of my contracts I want to get out of as this trade starts working in our favor. And as you can see right now, it's trading at 28 cents. Our average price is 32 cents. Okay. And real quick, we'll come back and watch this in a moment, but I do want to go over one more time that here for our edge alert, the GDP hot print, we were telling you guys that we are using our money management, the nowcast gauge. All this play was based off of it. Says it right here. Do not hold blindly to expiry. Use the Wednesday, February 18th final GDP now update to scale your risk. Okay. The final update, when we checked during our broadcast yesterday, we had an update of 3.6. But today, the day before the news comes out, we are sitting at 3%. Okay. Again, the rules of engagement are plain and simple written right here for us. If it was above 3.4, we were holding with high conviction. That's what our contracts were trading at yesterday. Okay. High conviction, the 3% floor is safe even with a surprise shutdown drag. Okay. Now, 3.2 to 3% would have been a hold for neutral margin. For margin for error narrows to within the model's historical and absolute error. Okay. Now it says if it was below 3%, skip and cut risk, and that is not just telling. It's stating that we need to cover and get out of this position. This is too bearish. Sell before Friday's release. So that is what we are addressing today for this play on the U.S. Quarter 4 GDP for 2025, have covered our positions because we see that they are trading at a or that our gauge, our GDP now tracker and our nowcast gauge is under the 3.1%. We have cut this prediction. Now, I'm going to go back to where we are sitting today and showed you how to do the live execution of this trade here, and we'll sit and watch this position, right? It tells us right here that we are filled at 32 cents. They're trading at $1 or now they're trading at 19 cents. So watch, I still have my $2 in right here in my buying power, $2 and 87 cents. So what I can do is I will buy in dollars, 2.5 more, right? And now watch what happens. I go from my original contracts that we had, right? Which were our 15 contracts. Now we have 24 contracts, and our average price is at 27 0.80, okay, 27, practically 28 cents, and it's trading at 23 cents. We will sit and watch and manage this position for our live. I'm trying to show you guys that you can get in and out of these contracts, and um you can also scale in and out using the contract feature. Okay, now this is not one of our edge alerts. This is just for the people in our Substack community and or people on YouTube who are not familiar with how to execute trades using the Kalshi platform. Again, here is the buy. If I want to get in more, you click the buy. If you want to start selling your position, you go from the buy and you click on the sell. Okay, now you can see that I'm filled at a price of, I have 24 contracts of yes at 27.80 cents. Okay, really, we'll call it 28 cents. And it's trading at an average price of 20 cents right now. Let's say it starts to go in my favor. I want to get out of a majority of my positions, right? I will sell 15 of these contracts if and when the contracts trade above 28% or 28 cents. Remember, when you're trading with the predictive markets, each contract ranges from 0.01 cents to a full dollar. And another way to think of these contracts is that it's telling you the probability of that outcome. So right now, it's saying that there is a 19% chance that Bitcoin will be under 67,250 by 3 p.m. Eastern Standard Time. As you can see, 66,937 is what it's trading at right now. It says 66 or 66,934, right? We're waiting for this. So we'll see if it is, if it's going to work itself out. We still have 45 minutes on this contract, and we also are going to be live for the next 45 minutes, okay? Now, another thing to keep your eyes on, and what we do here at the Forecast Edge is we trade the futures markets, okay? And today, let's see the overall weekly performance of the S&P 500. Okay, so we got a nice doji here. 2 weeks ago on the 26th of February, looks like you got a closing doji candle, and then last week of, which was this Monday, February 9th, excuse me. So this was going to be February 2nd to February 9th, and this is the candle that we're on right now on a weekly time frame. Okay. Sometimes watching them like this is the most important thing. Okay. I'm gonna keep our XLE up here, okay? Refresh this. And I can show you this too. Ready? I remove my technical analysis drawings there. And I go from my 12 or my 1 week, and now I'm going to go to 12 months. So each candle that you're seeing on this chart now is going to be representing 12 months, one full year, okay? So, and we'll do this, and we'll make it forecast edge blue, okay? And what I'm doing now is I'm going to find each body and wick of our candles here for XLE, which is the option play that we're in, and this one is in our favor. Again, we have the services that we offer here at the Forecast Edge vary from our edge alerts, right, which are going to be our algorithm based and data backed engines that produce high probability trades, creating, no pun intended, an edge for us here at the Forecast Edge and for the members of our Substack and trading community. Now, another thing to keep in mind when it comes to these financial instruments is that they all follow the rules of fundamental trading, okay? And what I mean by that is that the oldest way in the book, supply and demand, right? Support and resistance. All contracts, whether they're predictive markets, cryptos, stocks, futures, everything revolves around those same principles. When it's too high, we sell it. When it's too low, you buy it, right? Now, it's what we do here is we show you guys how to identify and come up with these trades, whether it's using fundamental and technical analysis or using our cutting edge, again, no pun intended, cutting edge algorithmic trading software. Okay. And all it ever comes down to, whether you're trading options, you're trading futures, you're trading predictive markets, risk management is the key. We here at the Forecast Edge help traders become the 1% of traders who can make a living and or make money with these financial instruments. Okay, that's why we say don't just predict, profit, because we profit and we want you guys profiting too. And it's as simple as risk management. If you manage these positions properly, you can and you will be able to make profits. It's all about discipline. It's one of our other sayings is be patient, be positive, and be disciplined. And we say that because that is psychologically you want the confidence. As a trader, it is a very competitive industry. And no trader, just like no competitive individual, wants to be wrong and or wants to lose, right? But with the proper risk management and the proper mental aspect of trading, it takes away that emotional part of it. All we do is execute our positions and manage them. What our competitive edge is that when the positions present themselves, we are confident enough to take these positions and we are confident enough to execute on these positions, okay? So, real quick, this is me again. I'm going over XLE. We started in the 12-month chart and now we jumped into a 6-month chart. So, each candle on our screen here is going to be representing 6 full months, okay? And I'll show you why this is important to do in a moment. Because even if we've probably spent no more than, let's say, 2.5 minutes to 5 minutes getting these levels presented for you on the chart here that you're seeing today. Now, watch how incredible this is. I'm going to go from the 12-month, right? Now we went to the 6-month. I am going, and those are what we call in the industry macro environments. Macro environments meaning that each candle is representing a large scale of time, such as months, years, right? But we trade them in micro environments, which can be anywhere from, hours to minutes, seconds, however you want to do it. I like to trade personally in the 2-minute charts. Now, watch what happens when I refresh this, okay? You'll see that one of the levels that we just made here, right, has already has already worked its way out today. Look, we had a doji candle right on the level. So that means right here that if you were shorting XLE, for example, in this, right now we're long these positions. I'm just showing you another way of um creating opportunity in the market. Um, that you can see. If you went short here, you had the potential chance to go short at 55.33 and it got down to 54.93, right? That's on one share. And everything in trading is also scalable. Remember, scalability. We don't talk in profits in dollar amounts. We talk in profits of percentage. Okay, percentages gained, ROIs, return on investments. Those percentages are the numbers that we base um our values and our trades off of, okay? Now, let me show you something. There's multiple ways. So even this. Now I'm going to go here real quick. And I'm going to go to a 4-hour chart and refresh it. Okay? And now I can find some of these. Now see how I went from my ones on the 12 month were big blue, right? The ones that were on my 6-month were medium in yellow, and now I will do one more of white in small on our hourly because I know that this is telling me for my own use in my own mental key is that blue means that it's a major level. Yellow means that it's a major level, and white means that it is still a major level where to the sense that the market reacted and or the price action reacted in a certain way when it got there, but it was used on a macro or a micro, or it was found on a micro versus a macro time frame, right? Again, time frames, and the longer and bigger the time frames are, the more probability or probable that these levels become. So since we saw it jump like this, ready? Here's a good example. So This price right here is 41.47. Now we'll go back to our 2-minute chart, refresh it, or I'll get you into like a 15 minutes so we can just zoom back. But look, even the ones we just made, watch where you see how on 53.19 we just made that level. Look at the perfect double bottom that we found on this candle right here. This perfect double bottom is telling us, it's as simple as it gets. Trading is as hard and or as simple as you make it. And especially here, I'm gonna, as always, I'm gonna plug our company up real quick. So here is our website, theforecastedge.com. Okay. When you go to theforecastedge.com, you join our war room. There you'll select which plan's right for you, and then you're granted access to our edge alerts. And our edge alerts are the plays that we are taking ourselves, that we send out, the trade ideas that we are taking, we send out to you guys, right? In the ABC fashion. We give you the trade and the idea, right? The trade idea, why we're getting into these trades, the contracts that we're going to be trading, whether it be options, futures, or the predictive market. We give you the exact contracts that we're looking at, that we have our interest in. And then we also provide the same risk management that we are following. Again, with the Forecast Edge, we don't just predict, we profit. We want you guys profiting too. And try to keep in mind, we are not CTAs and CPOs. We are not financial advisors. We are simply sharing our trade ideas with you guys and with our trading community. And then we come here on our YouTube channel, the Forecast Edge YouTube channel, and we manage these positions live in front of you. We are not executing positions for you. We are not telling you to execute positions. But if you would like to see and or be shared with the trade ideas that we're taking, that we've seen hundreds of percents of returns on so far, and we've just launched 30 days ago as far as our Substack goes. Even on this play right here, the IBIT Bitcoin, okay? Again, this was one of my favorite plays, but this is my top 3 favorites, okay? IBIT, this was the iShares Bitcoin ETF Trust. Now, this was going to be, it tells you right here, the IBIT Feb 6th $46 puts, okay? If you were to have put up $100, you would have made $502 on that 100, which is a 502% return, ROI on that play. Here's another one. This is my favorite one. The past MVP. This is so good. The Tesla bear trap. Check this out. This is going to be the Tesla December 19th 460 calls, okay? We got in on these contracts at $7.90. We got out at $32.20. That is a 307% return on investment there. Again, for this one, if you put $100, you would have made 307 on your positions here. And right here, you can go right to our YouTube where we're hosting the live today and subscribe. And then you guys can watch and help and see these positions managed daily here at the Forecast Edge. Okay. Now, again, here's our XLE play. Let's see what's happening. We're up $50 today. And let's see if I can get you guys and see this real quick. Okay, excuse me. And we're in the money on these ones, guys. XLE. And then so these contracts, again, these are the June 18th contracts. I'll go back to our edge alert real quick. Okay. I'm going to our edge alerts. Look at this. Let me just go over a couple more. 190% in 3 days on our core CPI print. Okay. Here was our BTC play, right? This is the IBIT. This was our play on Smith and Wesson. Okay, here's our play on HAL for 271% return on investment there. Here's another one, the CLS Clay, the CLSK, the Clean Spark. This is 145% play. All of these positions that you're seeing in front of you so far, other than the one that we addressed today, which was the hot print, have produced returns of over 145%, okay, or 145% minimum. So and like I said, if we go back here real quick, right, we'll go to our cal sheet. If we go here real quick, right, we have the play that we just put on here, our gas money play, you're up 26% on this play at the moment, okay? And even with this, this is going to cover the this is going to be covering the position of the the hot print that we're getting out of, right? Why are we getting out of this position again? Because our gauge was the nowcast gauge, and if it was under 3.1%, we were told we were skipping and cutting and exiting this position. It is a kill alert on this position. We are out of this position because the convergence momentum is too bearish. Sell before Friday's release. We are out of this position, but in better news, we already have and we are already on top of another position, which is right here. This is going to be the four-legged position that we went over. The Trump, this is going to be the SOTU, State of the Union play, okay? And again, right here, what's so great is we have all of the contracts that we want you guys to be getting involved in, okay? Right here, the risk management that is required and that we follow to the book. And then the best part is for the people who are in our community, our Forecast Edge Substack and Forecast Edge trading community. On all of these, one of our sayings here is well, here's our sayings: be patient, be be patient, be positive, be disciplined. Don't just predict profit. And if you can click it, you can trade it. We put the Kalshi trade links in, or the options, or whatever type of play it is. We put the link in there for you guys to be able to click it and go straight to the position that we want you guys to be involved in, or that we're involved in, okay? Or that our community is involved in. Now, as you can see down here, we have yes to fraud, yes to ICE and National Guard, yes to nuclear, and yes to trillion. This is the four-legged play. Again, as all positions go with the forecast edge and the edge alert and how our midday broadcast works, that is, if you guys um, tap in live here, we manage these positions live in front of you. As the days and weeks and contracts progress, so do the rules of engagement and the risk management for these positions. We will always address them as they come up. We are here to help you guys. We want you guys to be coming to us, whether it be or trying to communicate with us, whether it be leaving comments on a YouTube channel, reaching out via social medias, joining our Substack in direct messaging us. We are here to help you guys. It's one of the services that we offer here too with the Forecast Edges, that we're coaches. We have over 100 years of experience with all four of the coaches that can provide individual traders with the proper mental game and risk management structure to become the 1% of traders who can make a living off of these financial instruments, because we want you guys predicting, we want you guys making money trading, we want you guys to be granted financial freedom. And these are ways to get closer. Is taking, the first step is might be coaching with us. The second step might be executing some of the trades, and whether they be your own trades or the trades that we provide here. All you have to do is join our trading community, which is our Substack. And how you would do that again is you go to our website, theforecastedge.com, join the war room, and that's where you'll select which plan's right for you, and then you are granted access to our Substack and our edge alerts. And again, we have 103 people in this community already, and I can't tell you how great of a community it truly is. It's exciting. It makes trading for the retail trader, um, less lonely. It's a sense of community. It's a sense of camaraderie. We are here to help you. We want you guys to enjoy trading as much as we do, and we want you guys to know that you can and will make money trading if you use the proper risk management. That's all it ever comes down to, is risk management. The same reason that we took off our position today for our GDP hot print is the same reason we are successful here at the Forecast Edges, because when it's time to get out of these trades, it's time to get out of these trades. We don't wait. We follow our rules to the T. Right here, we went to our link this morning, saw that it was at 3%. You're out, you're cutting it, you're done. That's when you get out of these positions, okay? So again, we're moving forward, and even on this one right now, again, 17%. This is in your favor, 17%, and it's only been on for 3 days, 4 days. Down here, We're at just putting this one on today. It's a break even. It hasn't fluctuated too much, but again, this is till the 28th. We still have about a week and a half, or just about a week till or a week and a half till this contract expires. This is going to be on it begins on February 24th. Okay, so we got about yeah, just about 5 6 days until this contract starts and goes live. And you can see here it's 1.6 million um in volume. So it is a very liquid market on this one. Um, Again, with that being said, go check your new alert. It just went off less than an hour ago, so we got something good cooking up there. Again, the hot print, we just went over the rules of engagement, went over the rules of engagement. We went over the gas money trade today, which we showed you, which right now at the moment was up 17% in our favor. Some of our declassified plays, and then the energy spike play that we went over, which was the XLE contracts. As you can see, we got in at a price of $5.20 here 10 days ago, and now we are trading at a total of 640. So your contracts gained our contracts gained a value of $1.05 minimum in the bid, mind you, or excuse me, $1.25 minimum, and the bid has an additional 45 cents to the high side if it starts trading at the buy instead of the sell, okay, or at the ask instead of the bid. Now, with that being said, um, thank you guys for checking out the videos. Thank you guys for all of the support. Always feel free to ask questions, leave comments, share trade ideas, reach out to us on our social medias, The Forecast Edge, on practically all social media fronts. So if you guys need anything, you can reach out there. Again, if not, go to our website, theforecastedge.com. That is where you can join our war room. And once you do that, you're granted access to our edge alerts and some of our other great features, whether it's coaching, or whether it's a loaded gun trading room with our partner Norman Hallett, or if it's something of the nature of just looking for the sense of community in chatting with traders who you want to share and bounce ideas off of. These are all things that we do here at the Forecast Edge. So again, with that being said, don't just predict, profit, and we will catch you in tomorrow's live broadcast. With that, enjoy your day, and we will see you in the next one.